This conference will now be recorded.
Good evening and welcome to today's Charts of the Day video. I thought today we'd take a look at some of the recent earnings moves and what we're looking for, what we got, and where things should go from here. So we'll start with Microsoft. Microsoft, we posted yesterday before it was set to report after market close yesterday that it was looked like 1, 2, 3, 4 and due for a fifth wave drop in the C of wave 4 in the larger diagonal for the primary degree wave 5 off of the March 2020 low. So it did drop after hours. It got down to 268.80. I know a number of you guys got some fills on some of those after hours limit orders in case they got that, and it reversed right away and actually ended today up +3, but it really hit an intraday high of 308 with a pretty significant move off of that low. Garrett and I were talking though that if you discount that after hours low that was made, and if the market is attempting to make that fifth wave down of the C of 4, then this could revisit that 268 or 267, maybe even down closer to the 260 region as one more low, with this still being 1, 2, 3, 4, and getting a fifth wave down. So if you did get some nice gains here, you know, it did look like 5 waves up. This could be an A wave of the A wave already and could certainly hold support in the 280s. But if we see a clear corrective bounce that looks like this is set up to drop again and the market is really dropping, you may want to shed a little bit of this or protect it in some way and look to pick that up again from the one more low. GLW was another one that was posted recently. I have this as a larger leading diagonal complete for cycle degree wave 1, so it's inside a larger corrective retrace as the cycle wave 2, ideally coming back towards 23. But off of the April high, we have a clear ABC move down, and we're due for a bounce as the B wave inside the A of that cycle wave 2. So this came up right into the 40 region that we were looking for, was up pretty strongly today. That could maybe be just the A wave of what will be a wider flat, but since we got pretty much all of that move that we were looking for, the intraday high hit the 618 retrace for a bounce on the nose. So especially if the market is going to start to head down to one more low, this could maybe start to reverse all of that gain pretty quickly. But I would not be opposed to it kind of meandering around here and then ending up filling out a wider flat for the B wave, maybe if the rest of the market, if it's going to catch support at a higher low and then be more bullish with the market, it may just not go anywhere. But nice pop up in line with our expectations for earnings. FFIV was another one from yesterday. We're looking for more of a drop in our fourth wave. So we did get a pretty significant drop down just under the 382, one through the 382 retrace, counting the top of wave 3 here. We could count it into the top here and then count the ABC a little bit differently. But I like this wave 3 topping here because I can get 5 waves up in the fifth, and that's closer to the 100% extension here. But good setup also for this to be reversing off of the 185s and heading up towards 297, maybe even 350 longer term. Again, like the market, it could try and retest that low if the market is going to try and make one more low, especially if we're counting this as the A, B, and a C wave down. This could be 1, 2, 3, 4, and it gets a fifth of a C wave, but very much in line with what our expectations were. Tesla reported after the market closed today, posted a bigger update, and Garrett and I were talking about this a lot after the market closed as well. Garrett is still giving this the benefit of the doubt of being the smaller 4, and then the truncated high, instead of counting it as all of this 3, counting this truncated high as this 3, and then an ABC down for this wave 4, which I think that's a little bit more reliable. This is still really, really large compared to this smaller wave 2. but that makes this at least in line as ABC for 4, a little bit more palatable, similar to the same size as this ABC for 4. And so it's only this move that's really disproportionately large. Whether we're going to count it as still a 4, or maybe it is the start of the primary wave 4 already, I think is not the, it still is going to, looks like it is going to try and get one more low into the low 800s. And that's going to be an ABC move off of this high, and will be set up for at least a significant bounce. So if we can get that one more low as the market, it didn't drop, although it dropped a little bit after hours on earnings, but then is rebounding a little bit. So we'll see if this is going to follow through with the market to try and get that one more low around 820 to 815 and the 200-day moving average. And that's certainly going to be good for a bigger bounce as a B wave, if not turning into more. The other one now was due for the start of this B wave. It looks like it had room to drop a little bit. It did drop some and has put in a pretty substantial reversal. So this should be the start of the B wave inside this larger cycle wave 4. Probably most of all, well, maybe this is just the A of the A, and this turns into just a wider flat. So it could fade a lot as a B wave inside this A, then pop up again, and then another B and C wave up. But that definitely looks like that's confirming that dropped to our low and then reversed strongly off of that as the A wave for service now. STX is holding as this B wave. I said, that the structure here was a little bit iffy, whether this is trying to be a wider flat for the wave 4, or whether this was all of the wave 4. It's kind of awkward off of that low, but it was holding as an A and a B. And this 7% move does look like it is in line with the possible start of a C wave. So not a bad move there. Edwards getting that drop as the 5th wave of the 4 that we warned about. So this, if it can hold down here, it's not reversing like Microsoft did, where it hit that after hours and then got all of it. Certainly has room to head all the way down closer to the 96, 97 region. But this is kind of proportionate as 1, 2, 3, 4, 5 already in this 102 region. So that could be all of the move. But again, if we're looking for the market trying to get a 5th wave lower off of the corrective bounce that we got today, then it could drag down on some things like this that look like this could have been all of the low, and they just extend that. So this is set up nicely for a 5th wave, actually very, very similar, as I mentioned earlier today, to that Microsoft count. 1 degree smaller for whatever reason. I have this, it's the same March low, just I have it, the larger degree, I have it as 1 degree smaller. So instead of parentheses 4, it's just a minor degree wave 4, but pretty much the same count there as Microsoft. RES getting a nice pop, advancing further in the C wave of wave 5. This can be 1, 2, then 1, 2, 3, 4, 5 of 3. So it can fade from this as a 4th wave, and then should get a 5th wave up towards that 775 is kind of a minimum target where our wave 1 at the cycle degree should hit as far as those yellow fibs. ADP did not get a bounce. We had a move down that did look like what should have been only an A wave and had just a tiny little blip off of that low. So really wanted to see this try and bounce on earnings. This is the risk that we see in earnings a lot, that, particularly when markets are a little bit more volatile, sometimes more normal bounces like this can be skipped. And so instead of earnings being the catalyst to propel it in more of that bounce, it decided to use that as all of the B wave and then start dropping in the 4th. But this 4th wave drop can put it in line with charts like the RES and Microsoft that we just looked at. So this certainly has room to extend now in more of the C wave of that 4 into normal support region for the 4th wave of a diagonal, and then we'd be looking for an ABC move up for that 5th. HES, I think, is one of our energy names that we follow most closely. It has a really good representation of the purple, the diagonal that I'm using purple to illustrate how similarly a lot of these charts look to each other. It popped, yesterday at the low, or not yesterday, Monday's low, we hit our 382 retrace. That could have been all of our B, and we're heading into earnings as though this could have been the start of the C wave up. We did pop initially today, but on the Fed reversal, as we warned on a lot of these energy charts, it looked like that could have been the top of a B wave inside a wider flat of this B. So easily coming back down to test this 83 to 80 region as the wider flat. It very much in line with a lot of the other energy charts, but then still set up for the C of 3 and then the 4-5 later to come. And then last, wanted to take a quick look at AT&T, dropped 8% today. I said this really didn't quite look like a fourth wave. It was starting to look like more than a 4, but even if it was more bullish, it was due for a pullback. So Garrett is counting this as the same diagonal that I have, but instead of this being just the 3 of the C of 3, he has this as all of his third. And this move up is the A wave of the bigger fourth wave bounce. So this drop would be the B wave. It needs to hold this 2350 region. So if the market is going to drag lower with the fifth wave down to a lower low from Monday's lows in the market, then this could just continue to fill out the yellow 5 to one more low here and then bounce in this 4. But there is potential that if it's not going to get dragged much below the 2370 to 2350 region, that it heads from there more directly up towards the 3132 as that fourth wave bounce. Can't put a lot of faith in this being all of some sort of other alt B wave. The real chance for this to be the B wave and something more bullish was back here. It failed that here, failed again, and then really failed here, and now can't really give that the benefit of the doubt. All right, I'll get this uploaded for you guys, and we will see you tomorrow with our big shopping list for the rest of 2022. Take care.